Hello and welcome back to the Note. Oil continued to rebound today. Brent crude is now up 21% from its low for the year. People are obviously feeling more optimistic about that now. That's largely because of evidence that supply really is beginning to be cut back. The rigs in Texas are being cut. Bear in mind that it's still down for the year, and it's still down more than 50% from the high of last year, but at least there is some hope that a bottom has been found. Now that had an effect on stocks here. In the US, the S&P rebounded quite dramatically, having been down in the morning. It ended up 1.3% for the day. That was led by energy stocks in particular. Apart from what happened in the oil market itself, there was great comfort taken from ExxonMobil's results, where the management there talked very bullishly for the future. You also saw good stock market results in Europe, despite the ongoing situation in Greece. One point of concern, though, is China. It ended last year as the world's hottest stock market. It is now down for the year. And if you want to explain some of the trends that are behind that, let's take a look at the latest ISM data. These are manufacturers' surveys that come out at the beginning of every month. All of them are set so that above 50 suggests expansion, below 50 suggests contraction or recession. You can see on that basis that the US has been crimped back quite noticeably, even if it is still leading the major developed economies. China has actually dipped just below 50, rather a sign for concern. Meanwhile, the Eurozone, despite all the worries about the Eurozone, is actually ticking upwards. If you want a trend to link those together, it's the dollar. The dollar is very strong. It's linked to the Chinese currency. And if we now show you the ISM export orders index compared to the dollar trade weighted index, you can see that with the strong dollar, so the exports index has actually gone below 50 for the first time in more than 2 years. That strong dollar is finally, it appears, beginning to have an effect on US industry, and also beginning perhaps to be stimulating the Eurozone. Now we'll get far more evidence about this as the week goes on, far more earnings from companies here in the US, and of course non-farm payroll data at the end of the week, also from the US.